Fantastic. Now I know we have a whole group of co-sponsors here, but Brent, also you were the one that set this up. So would you like to do the honors of introing us and doing a little kickoff, and maybe we can do just a quick 10-second intro from each of the sponsors that are here, and then we can jump into the opportunity.
Absolutely. Thank you so much, Sam. And it's an honor to be here and so thrilled about this opportunity. We love Compass Capital, of course, and they are amazing sponsors and asset managers. I'm Brent Barkus, BB. Some people know me as BB. It's a nickname that I've had for many years from my music days. So if you hear BB, that's me as well. My company is I-65 Capital Investments. We're a boutique private equity company here based in Nashville. And we co-GP on deals here in Nashville. We love value add multifamily real estate, especially in the C plus to B asset classes. So, our goal is always to collaborate with amazing partners, and we're always looking and vetting great sponsors to partner with on great assets. So that's kind of our vision here in Nashville. So anyway, welcome everyone. I want to be brief because I know we have a lot to get to, and Sam's going to do a great job sharing the opportunity. So that's me, Brent Barkus, here in Nashville, Tennessee, with I-65 Capital Investments, and we're excited about the flats at Nolensville. So please, Mitchell, if you want to share a little bit.
Yeah, I'll jump in. My name is Mitchell Rice with Elkstone Capital, and I've had the opportunity of knowing Sam's partner, Michael Whiteley, for a few years and doing some work with him, and in recent months also getting to know Sam better. Also co-GP'd with the Compass Capital team on the Easton, their last acquisition. And yeah, this is a even better deal from a return standpoint, the flats at Nolensville. So already been out there. We've toured the property and just super excited to tell everybody more about it.
Awesome, thanks. Anyone else that's a co-GP want to share a little bit? Introduce themselves, or Sam, if you want to take it from here, either way.
Yeah, Rick, Jen, you want to give a quick 10 seconds?
Go ahead, Jen.
Sounds good. Thank you. Jen Lowry. I'm based in Dallas and managing partner of Simply Thrive, and super excited to have met some of you guys in person in Nashville when we were touring, and I'm very excited about this race. So thanks for having me, Sam.
Thanks for being
Jen.
here.
Rick, round us out.
Yeah, I'm Rick Schertz. I'm in Austin, Texas, with Freebird Capital Investments, and think highly of the work that Compass Capital is doing, and glad to be on this call as well. So thanks for having me here.
Thank you, Rick. Now tell me, can you see presenter mode, or do you see the actual slides?
Presenter mode.
Presenter mode.
What about now?
That looks good.
That's a little better.
Yeah. Awesome. Very good. Well, appreciate it. Thank you all for being here tonight. My partner, Michael Whiteley, is hoping to join. He was driving without service. So if we get him at some point through the call, we can let him say hello as well. But thank you all for being here tonight. My name is Sam Frower. I'm managing partner of Compass Capital alongside my partner, Michael Whiteley. We founded Compass Capital about 3 years ago now. Prior to creating Compass, I worked at a REIT in Utah, where I'm from originally, for a number of years. Did about $500 million of transactions while I was at that REIT, and learned the ins and outs of the multifamily space prior to creating Compass Capital. And as Michael and I were looking, understanding we could invest in apartment, we knew multifamily was what we wanted to focus on, and value add specifically. We love the idea, right, of being able to buy an already cash flowing building that can generate distributions for investors right out the get-go, but then also to have the ability to add value and drive that even further. And as we were looking which market to begin in, we decided on Nashville for a number of reasons. I know we've got a few investors here in the past, and so this may be a repeat, but we love Nashville. It's one of the hottest markets in the country, a great place to be investing. Where Brent lives and where my wife and I are looking at potentially living. But we love Nashville. We've got a little under 80 million of assets under management, all in the Nashville area, a little under 500 units. And this flats at Nolensville is staying true to our course, is a 205 unit building just about 15 minutes south of downtown Nashville. So I will go ahead and jump in and share. Brent or Rick, if you could watch the chat, if anyone has questions as we go, feel free to hop in. And I would also say for all of our co-sponsors here, as I am sharing through this presentation, feel free to jump in with any thoughts or comments as we go. Right before we jump in, I'll give the classic general disclaimer, right, that all of this is privileged and confidential information. We're not guaranteeing any returns. Talk with your financial professionals, etc. This is an investment, and so you have the chance to gain money just as you are to lose money. We're very excited about this one. Feel like we've been very conservative in our opportunities, but this is an investment with the potential loss of capital, though obviously with the potential large upside as well, which we're very excited about. I will also mention that we will have this slide deck available to you at the end of the presentation as well. Follow up with your co-sponsor who invited you to this meeting, and they can provide this to you. Perfect. So at a high level, I love to start with what does this, before we jump into Nashville and the deal and what does this look like, I like to start with what this means for you as the investor, right? At the end of the day, I'm sure you care about the vehicle that your money is going in and what we're going to be doing with it, but what does it mean to you? And so at a high level, what we like to say for a deal to make sense for us to be investing in it and investing our partners' capital in it is that it has to, from a conservative basis, feel that over our 3 to 5 year hold, call it 5 year hold, that we're going to be able to 2x your investment. So if you invest $100,000, that can turn into $200,000, that you're getting cash throughout, right, through the rental income of the property. This property is projecting about 7 to 9%. And that is averaging out to be about a 16 to 19% projected IRR. IRR is kind of a technical term in the financial world for average annual return. It just takes into account the time value of money. But essentially what that 16 to 19 number means is about a 20% average annual return over the course of the investment. And so we get really excited about this, right? That we feel if we can meet these returns, be giving you cash flow throughout the investment and the opportunity to potentially be doubling your money in 5 years or less, that's something really exciting, that it's what we've dedicated our business to. And we have to look through hundreds of deals to find ones that we believe work and will work well. And flats in Nolensville is one of those deals. And so again, just to give you a high level of projected returns, this is just breaking out, again, based on a $100,000 investment, what that could look like. And so you can see at the top left, that CoC, that's cash on cash return. And so it's saying, hey, in the first year, while we're still executing on the value add plan, we're bringing rents up to market, we're maximizing the property, the cash flow starts a little lower and then grows year over year. So we're expecting about a 5 to 6% return. So if you invested $100,000, $5,000 to $6,000 year one, and then just continues to grow from there. You'll see that then the large outlay of capital is when we're actually executing on the sale of the asset come year 5. And overall that we're looking at with that bottom right, that total return, including your principal, including that $100,000 is $214,000 to about $240,000. So more than doubling the investment. Any questions there or comments from my co-GP team?
Nope, nothing in the chat either. So.
Awesome. So again, very excited about this. I, for years, was in the stock market, sometimes made money, sometimes didn't, almost just felt like gambling. I love real estate, that we can go in and say, hey, here's a very clear, cut and dry property that we can go, that's already cash flowing, that's already 95% occupied, that we can go and make better, bring rents up and make it even more. So I view this, again, as long as you're buying in the right deals, as one of the best risk-adjusted returns places that you can be putting your capital in. So let me tell you a little bit about this property. We'll dive in first to Nashville and the area around the property, and then we'll dive into the business plan and the property itself. So as mentioned, this is flats at Nolensville. It's in the Nolensville Pike area, about 10 to 15 minutes south of downtown Nashville. It's a 205 unit building. You can see here's a few pictures of the property as it currently looks. In general, they've done a decent job in the way that they've presented this, but honestly, the current ownership, and part of why we get excited about this deal, is that they are in trouble. They bought about 15,000 units over the past 2 years that were highly leveraged with variable rate loans, and they were trying to manage their own properties and doing a really poor job. And so we're able to come in this opportunity and not only fix up the management of the job that they've already been doing, but we're able to take over, and we'll dive into it a little bit more shortly here, but with a great loan and with a really great purchase price. But we're able to very, very quickly, we'll be able to turn around the feel and the overall culture of this property as we start to show the tenants how we're going to care for them. Again, we'll get to the property in just a moment, but at a high level, and I won't dive too much into these just for the sake of time, but would invite you to look over our slide and see just why we love Nashville, Tennessee so much as a place to invest, understanding we can invest anywhere in the country, and we've invested almost 80. This will put us at over $100 million of assets under management just in Nashville. Is that it is booming. PwC, one of the biggest consultants in the world, and the Urban Land Institute come out with a yearly huge article on real estate investing, or like a big like 200-page package. And as part of that, they'll name the number one place for real estate investing prospects of that year. And it's never been the same city twice, the same 2 years in a row. And Nashville, the past 3 years, has been named the number one place to be looking at investing in real estate. They call it just a supernova of growth. And if you go to Nashville, you see it's just cranes as far as the eye can see. There's so much development across a variety of industries, a ton of tech companies and large companies moving there, a lot of job growth, a very landlord-friendly and business-friendly state. There's just so much to like about Nashville. One thing that I think something I really like about it that I'll mention is most people know the Tennessee Titans, the NFL football team that calls Tennessee or Nashville home. That their current stadium is fine, but they want the Tennessee Titans and that stadium to be a preeminent stadium for entertainment, for sports, for music, for the whole world to be coming to. And so they're actually tearing down that stadium, building a new one. It'll be over a $2 billion investment. And as part of that, the city of Nashville is paying over $1 billion of that stadium. It's the most a city has ever paid for an NFL stadium to be built in their city. And it's just an example of a city that is super pro growth, that is doing everything they can to bring people to where they live. And just again, an example of why we like Nashville so much, that they're doing everything they can to be a hub, to be a major population force for years and decades to come. Another good example of that is Oracle, one of the biggest tech companies in the world. They're building a 60+ acre campus, over $1 billion development that's already well underway, just a few minutes north of downtown Nashville. That's bringing almost 10,000 jobs, over 12,000 jobs to build the thing. There's again just so much growth and development going on in Nashville. Any other comments that my co-sponsors want to add about that before I keep going, just about why we like Nashville?
I'll jump in since I live here. I've been a loyal Nashvilleian for almost 30 years. I've been lived in California for a little time, but raising my kids here, and like what Sam's saying, obviously the growth is amazing, and that whole east bank of the river there. You have Broadway and you have Second Avenue, which has been the hotbed where everyone hangs out, and people spill out of the arena and down to all the music and all the events and things going on. But the East Bank now is the next phase, which is what the Titan Stadium is going to be, and Oracle. So it's really amazing. That whole area is just even going to grow even more. And like I said, we're all in on entertainment. As you know, we're the Music City. And so the goal is to get the Super Bowl and even bigger events, World Cup probably. So that's why they want to get this new stadium in. So anyway, little tidbit from a local.
Awesome, Brent. Thank you. And yeah, I couldn't agree more. Part of why we've liked Nashville too is sometimes, it can be riskier to be investing in a town that has like a one-trick pony. Let's say it's primarily like military driven or something along those lines, that if something happens to that one industry, then all of your tenants are going to suffer. Nashville is very broad, very diverse in the types of jobs and the economy that lives there. And so we really like that even if some sectors go up and down, as we know, industry cycle, that there's a lot of different places where our tenants can be getting jobs and working, that Nashville is definitely not a one-trick pony, so to speak. This just, again, goes into the different types of jobs in the area, more demographics, economic drivers. Again, we can share this presentation with you, but just a lot to like about Nashville. I will then just briefly mention about then now flats at Nolensville. So about just 15 minutes north or south, pardon me, of downtown Nashville. Again, just a great gentrifying area. It's within like 8 minutes of Brentwood, which is arguably one of the nicest suburban areas around Nashville, maybe the nicest. Brent could correct me if I'm wrong, but one of the really nice areas, and you're just seeing a ton of, again, continued growth. You're seeing lots of older homes being torn down, new ones being built up in this area, that it's just getting nicer and nicer. Now, we're not necessarily including that in our business plan. We're still saying, hey, this is a workforce housing type asset, and we're going to continue to have it be that. But there's a good chance that as the area continues to grow, that we're going to start to have a different tenant base as well and be able to increase rents even further. Now, we don't include that in our analysis. We'd rather under promise and over deliver, but it's very much a possibility. So where Flats is, it's got a fantastic access to major freeways, as I mentioned, near Brentwood, right by downtown, the airport, near major employers. You can see here Flats on the left-hand side, the blue square. There's every amenity that a tenant could possibly want within just a few minutes of where they live. This is really a fantastic, call it B plus type area, with every amenity that a tenant could want. And here is a bird's eye view as well. You can see Flats in that rectangle, or I wouldn't even call that a rectangle, almost an upside down Oklahoma type looking shape. That is our property, Flats, and you can see just a variety of amenities, businesses that are within just walking distance of the property. So that's a little bit about Nashville, a little bit about the Nolensville Pike area as well. Let's dive in now into the business plan, right? How are we actually going to execute on driving this value, creating these returns that we've discussed? I also think someone may be playing like a guitar or a mandolin in the background.
It's
so
not
just
me.
a heads up.
It's not me.
And it's not Brent, which is surprising because
shocker. Yeah.
something I can share. Brent hopefully doesn't care I'm going to share this, but Brent was the lead guitarist for Shania Twain, among others, in his previous life. So I'm surprised it's not Brent playing the
I could be
guitar.
playing along for like a little background, but no, I won't do that tonight. So.
Sam, I thought you were setting the tune for your pitch here.
Yeah, I love it. Yeah, just a little bit of background music. Perfect. Well, appreciate that. And yes, so how are we going to execute on this, right? And we have 3 high-level items that help us be successful. We have a great professional management team, a group called Volunteer Properties. They're both going to be running the property management as well as the GC, the general construction side. We've partnered with them on all of our other properties. They've done a really good job of managing. We have a great relationship with their president and owner, and do a very good job of managing our properties for us. As far as the property improvements, as mentioned, right, this being a value add, meaning we're going to force that value, force that appreciation. We'll be jumping into what that looks like shortly, but both the interiors, the exteriors, putting millions of dollars into the property to enhance it and make it better. And ultimately, at the end of the day, right, increasing NOI, which is net operating income, and reducing the expenses. What's fun with a market like Nashville, and not to dive too much into commercial real estate and technical terms, but there's something called a cap rate that usually in the Nashville market, and again, it goes up and down, but it usually hovers around about a 5 cap. And what that means is for every dollar of income that we can increase the property by, either by reducing expenses or increasing profit, that then equates to $20 worth of profit on the sale. So that's where commercial real estate can get really exciting, that as you increase the income even just by $1, that equates to a 20x return as you're selling the assets. A little bit about how we're looking at this deal from a lending perspective. We really like this because, as we know, interest rates have shot up over the past few years, and that we are actually assuming the debt that is currently on the property. And so this is a 5-year interest only loan that has a less than 5% interest rate, which is fantastic. You won't find that anywhere in the market today. So it's a 4.88% interest rate that is locked in and fixed. It's not variable, that we know that it's going to be that throughout the course of the loan, and then that amortizes over 30 years. And so we really like that as well, because a lot of deals in the past we've seen other operators do bridge loans or variable rates, and they're just fingers crossed that rates aren't going to go up, that we're locked in with a really low rate because we're assuming the rate that the seller already had as we're taking over the property. And then you can see as well conservative underwriting, that we really, our goal is to under promise and over deliver, that everything we show, we almost try to say, hey, this is how it could run if it was in middle of nowhere, Arkansas. But because it's in Nashville, because it's in a growing area, there's a good chance that it could do a lot better than this. But even just at a very baseline level, we feel really strong that we can operate and execute on our business plan.
Sam, before you go on, if you went out to the market and originated new debt today, what would the rate be if you weren't able to get this assumable?
Yeah, good question. It would be probably anywhere from 5.5% up, so over 60 basis points different. Which again, when you're talking about a $24 million loan, that is a significant amount of money more that you have to pay when the interest rate goes up like that.
And of all the deals you guys analyze, how often do you find something like this that's assumable and positive leverage, meaning that the going in purchase cap rate is well above the interest rate?
Good question. Not often in today's market. And that's where it's kind of it because someone like that, they don't really have a reason to sell, right? They should just say, hey, let me hold on. And when the market gets better, we'll look to sell then. So it's not often that you can find a deal that has a great loan that's already existing and be able to buy it.
That's great.
Thanks, Mitchell. Appreciate the question. And part of that, right? That's why we get excited, as mentioned, is that this group is in trouble, that they own about 30,000 units. They bought 15,000 over the past 2 years. And so now all the properties that they've owned longer than 2 years, this one included, they're now selling as fast as they can just to get money, to have capital to ride out kind of the situation that they've put themselves in. And so, for example, like when they refinanced this property to put this loan on it, it appraised at almost $35 million, but we're buying it for $30 million. So a huge discount, even compared to where it appraised less than 6 months prior to us getting under contract. So we get really excited just from the purchase price, outside of all the value add that we're going to do to increase the rents and drive the value. But just from the purchase price alone, we think that we know that we're getting a phenomenal deal. Again, right, that this was valued at $35 million just 6 months ago. And so as we look at the sources and uses, again, won't dive into this too much, but it's just showing here's the purchase price at 30.3 million, and then going through what we'll be using it for, right? That our all-in costs will be a little over 34.5 million, and that's a combination of the purchase price, our operating capital, our CapEx improvements, right, where we're actually going to be going in and renovating and improving the amenities, et cetera, and then closing costs, obviously, closing cost, acquisition fee, et cetera, for what it takes to close a large deal of this size. And then you can see below that the sources, debt and equity financing, the combination to get to that 34.5 million that we'll be assuming that loan for a little under $24 million, and then bringing in about $11 million of equity investment. As we look at the timeline of what we'll be looking to run with the flats investment, is the first 2 years is when we'll really be executing on our business plan. So about 80% of the units have not been renovated, or they're in various stages of renovation. That we'll be going in, we'll be renovating those units, bringing them up to the standard that we know the market in this area is looking for. I'll show you what that looks like in just a minute. We'll be renovating all those units. We'll be upgrading the exteriors, adding amenities. I'll show you also everything that we'll be doing in the first 2 months, but essentially, or in the first 24 months, but essentially executing our business plan. And then from the 24 to 36 months after that, and really just 24 months on, really have stabilized the property, be maximizing the cash flow, potentially be looking at doing a supplemental loan or refinancing, depending on where the market's at. Again, we don't like to project this because it just makes the returns look crazy, but we definitely will be looking, once we execute on the business plan, to have some sort of refinance event, which would then mean, hey, let's say you invest $100,000, that we're returning to you the majority of your capital as we're refinancing the asset, but you're still fully in the deal as far as cash flow returns go. But you've now got a significant amount of the money you invested back to you. So that is definitely a potential that we will look at depending on where the market's at. And then really looking at selling the asset and having that large profit event in years 3 to 5. So how do we do that, right? Really, we'll show quickly both the interior and the exterior of what we will need to do to execute on this. So on the inside, the unit renovations, that 188 of the 205 units will undergo, call it the quote unquote full renovation. That about 17 of the units have already been fairly well renovated. So we may add like some premium updates, like a smart home package. You know, we'll see as we get in and what the tenant base is looking for, what we add, but just to make sure it has a very premium look and feel compared to the other competitors in the market. And you can see in the bottom there that we'll be adding, right, black appliances, vinyl flooring instead of old carpet. We'll be updating the cabinet fronts, adding granite style countertops, redoing the paint, the lighting, really, again, just overhauling, even though it's an older building that was built in 1979, to very much feel when they step in that it is a very new, updated look and feel. And part of what we really like, we'll talk about the rents in a minute, is the units that have already been renovated are getting the rents that we're looking for. So we get very excited. Often when you buy a property like this, you're saying, okay, we have this plan and we'll renovate the units. And there's a good chance when we renovate them that we'll get the prices that our competitors are getting because we'll look just like them. And that is the case with this one, that we're already getting the rents that our competitors are getting with these 17 units, that because this owner already started renovating, they've already proven out our business plan. They've already are getting the rents that we're going to be trying to be getting. So it's essentially just continuing to replicate and duplicate what has already been started to be executed at the property. Part of that as well, right, is they have not done that much from the exterior. So we're going to be totally overhauling the look and feel of the place, from resurfacing the asphalt, adding the playground. Yeah, and Brent or Jennifer, do you remember the state of what the playground currently looks like?
Jennifer,
Something
please
that
share.
something we probably wouldn't want our kids playing on. I think
Something,
physically
yes.
moved it myself.
Yes. So, I mean, again, right, this is a ton of families live here, and this playground that currently lives, it looks like it's been there probably since the place was built and is falling apart. And my partner Michael like literally went up to it and then like moved it and it swung. So we're going to be bringing in a very nice playground. We're going to be adding a dog park. We're going to be adding again, right, it's very dark at night, so we're going to be adding lighting and a security camera system. We're going to be resurfacing the pool, adding right in this pool area like a little outdoor kitchen with a pergola. We're going to repaint the outside of the units, add property signage, put a ton of money into landscaping, just completely overhaul the look and feel of this asset, which again, we get really excited because we're like, they're already getting the rents we want with it not being that nice. And with us doing all of this, like, not only do we feel really good, we can get the rents that we're aiming for in our model, but that there's a good chance that we can do a lot more.
Sam, real quick, I like to drive these assets, just anonymously, just go through and just act like I'm, just looking around. And so I did that on a Saturday, and yeah, obviously, like what you're saying, it definitely is very in need of amenities. But I mean, there were so many kids out playing soccer and making joyfully enjoying what they have, but I can't, it's very exciting to think as you're saying, we get excited about new amenities, because it definitely will give us a feel of a stronger culture and more of a proud ownership of where they live, so.
Yeah, I love that, Brent, 100%. And part of what I love about that too is not only do we want to have the rents be at a level that is as high as possible for our investors, but we really want to change the culture that exists there for these residents who are living there to feel like us as the management and the owners really care about them, right? That they're going to start caring about the property and caring about taking care of it as we start taking care of them. We've seen it at our other assets, where we took one asset over where like trash was a huge issue there, and we've done a ton of different things to make that not the case. And one of the things, right, is just showing care for these tenants. And all of a sudden, as they say, oh wow, the people that own this are taking care of the property, or taking care of us, that they're not leaving trash around like they used to, because they start to take some pride themselves in where they live. And so we'll be doing the exact same thing here at Flats. From a capital improvement breakdown, again, won't spend too long here, but just to show the numbers of, again, we're looking to be putting in a little over $2 million, both on a combination of the interiors and the exteriors. And here's just kind of a breakdown of what that looks like and the cost that will be going into each of these units.
Hey, real quickly, can I add
Mhm.
something there really fast on that last
Please
slide?
do.
Something that I was really impressed that you and Michael have done is just almost the way you've systematized, if you will, and made a process of how you do these improvements, right down to like where you're ordering supplies, which of course we won't get into those details, but I just think there's a lot of thought and care that has gone into it. And so I'm really excited about how we're thinking about it from that perspective too.
Thanks, Jen. Yeah, at the end of the day, right, like the actual value add plan, the actual execution of our business plan comes down to this. And those costs are so important. And so we work to be, again, with our GC team and our boots on the ground team, as dialed in as possible, that going into the property, even before we take over, we know exactly, or as much as possible, what everything's going to cost and what we're going to be executing on. So thank you. I won't spend too much time on this either, but this just dives into a quick high-level overview of the property description and what it looks like going into the breakdown of the actual building itself. But in general, we really like that it's good wiring, it's good plumbing. Again, for something that was built in 1979, it's in relatively good shape, and we're going to be fixing up any issues. We've got the money and the reserves that will be fixing up anything that needs to be done. But in general, the property itself is in good shape. As mentioned, and I'll spend just a few minutes on this now as we were discussing rent prior, but the unit mix of the property is primarily 1 bedrooms and 2 bedrooms. You can see we've got 95 1 bedrooms, 86 2 bedrooms, and then a handful of 3 bedrooms as well. And our average rent, you can see on the right hand side, is $12.72. Again, very low for this area. As we break it down of what the competitors in the area, and was out there with Brent, with Jen just a few weeks ago, and we went and looked at all of these other properties that are very similar to us in looks and feel. And you can see, as you look on the right hand side, the average rent that they are getting compared to what Flats at Nolensville is currently getting for their bedrooms is far more. And so we get very excited that by just putting in the renovations, by putting in the work that we'll be doing, not to mention the 17 units that have already been renovated, are getting these prices very similar to Residences, to Hickory View, but that we'll be able to bring the rest of our units up to bring us to that higher rent. You can also see that Flats is 97% occupied, which is great, but you typically see that once you get over 95, 96% occupied, that there's also a good opportunity to push rents as well. Like if you're that occupied, it means you're probably too cheap as well. And so we just see a lot of room to be able to increase the rent here. We also feel, because it's not like there's necessarily anywhere cheaper to live, that there's going to be a good amount of tenants, because we're not trying to up the rents by $400 or $500, that we're just looking at, $150 to $200 rent bumps per month. That there's a good chance many of these tenants will just continue to stay with the rent increases, which obviously makes our job easier as well, while still getting the returns that we're looking for. Very similar, you can see here with the 2 bedrooms, that you can see Flats, the average rent on the bottom there, at $13.60, and all of the competitors in the area multiple hundreds of dollars higher. And so as we execute on our business plan, I feel confident that we'll be able to get these similar rents. As we look at the financials, again, not to just make anyone's head spin, and again, feel free to follow up with your sponsor or with me. Happy to hop on a call with you and dive through any of this, but want to at least show, here is our pro forma. Again, we're expecting a 5-year hold, but we're showing you what this looks like as over 10 years of what the numbers look like, right? Of why we believe, based off the rest of the other assets that we own, that we own, of our understanding in the market, why we feel confident that we can execute on this business plan, and that the numbers that come down to of we can project these returns that we're projecting. And so I won't dive too much into this, but you can see both on the income side, on the operating expense side, that we're incredibly detailed of diving in, that we feel very comfortable and confident that we can execute based on how we're currently running our other properties, how our management group is running, that we'll be able to execute and meet these goals here at Flats and Nolensville. And just as part of that, right here, diving into, again, each single item, as we look at from the income to the expenses, just a little paragraph. Feel free to read this and follow up with us as well. But just going into with each area of income and losses, why we believe we can achieve the returns we are, why we have everything in line with the costs that we do. So at a high level, that's flats at Nolensville. Super excited. And again, it's funny, right? Like I say, someone will laugh at me. I think I was talking to Brent or I can't remember who it was, but I'm like, this is sexy, right? And they're like, how is this old real estate building sexy? And I'm like, this is sexy because it's like we got to take something that looks not so great and turn it into something, far better and be driving incredible returns for our investors at the same time. Like this is probably one of the best investments that we've seen. My partner and I, Michael, are just so excited about it that we're buying at a phenomenal price, millions of dollars less than it would have gone for a couple years ago, that we've got this fixed interest rate, that we have so much quote unquote meat on the bone with the units that we'll be able to renovate and drive these rental increases, that we are very, very excited about this deal. And so I'll just quickly go over some FAQs. If anyone has any, again, feel free to type them in the chat. We can answer them now also. But you must be an accredited investor to invest in this deal, meaning that you either have a net worth of $1 million or more outside of your home, or you make $200,000 or more a year, or $300,000 with you and your partner. Our minimum investment is $100,000. You are able to invest from your IRA or solo 401k funds. Please let us know if that's something that you're looking to do. Sometimes IRAs have additional questions or certificates of good standing, et cetera, that they need, and we can provide all of that information to you. As we look at the time horizon for this investment, we are looking to close at February of 2024. So in just a few weeks, actually February 12th is our close date. And so as you would expect, these investments go quickly. So please register and commit your investment as soon as possible. And as far as what splits and profits look like for us and our investors, is that this deal has an 8% preferred return and then a 70% split for profits after that return. So what that means is that you as the investor, and again, this is just our way as the operator, as the general partner, to say we really don't make money until you make money, that you have to hit an 8% return on average every single year. So let's say you invest $100,000, that you have to be making $8,000 that year, or let's say it's lower the first year because we're actually executing on our value add play and bringing the rents up. And so let's say it's $5,000 year one, that you'd need to have a total of $16,000 returned to you by end of year two, averaging right that 8% every year before we start sharing in any profits. And so we are very motivated for these deals to go well, to say before we make $1, you are getting this 8% return, and then we split 70% of the profits to you as the limited partner, and then 30% to us as the general partner. And again, if you have any questions with this, please follow up or let us know. Brent, Rick, before I finish up, are there any questions in the chat?
Nothing currently, but please, if there is anyone that I want to be sensitive to everybody's time. I know everybody has families and things going on. So if there are any last questions, this is a good time to put them in the chat, or please share right now.
Awesome. Thank you, Brent. And if anyone has those questions or is typing, as far as being able to invest, each of you have your sponsor that you are working with. They have a link that they can provide you that will take you to the investor portal. You'll be able to view the investment in all of its details. You'll be able to sign up. The next step would then be to sign. Again, it's all fairly seamless within the portal itself, but you sign the PPM, the private placement memorandum, which dives into the long legal 60+ pages of saying what we will do with your money, what we're allowed to use your money for, et cetera, what this investment is. You'll be able to sign that and then be able to have wiring information to wire in the investment. And so we have already begun accepting funds, and we're looking to, with February 5th, that may be pushed about February 8th or 9th of the cutoff date. And so we're looking to move fairly quickly here, but excited to be having you on board and joining us at Flats in Nolensville. And thanks for being with us tonight.
Yeah, thank you, Sam. Great job. We're very excited about the flats. Anybody else want to final words? Anyone?
I do have one quick question, Sam. Are we doing a cost segregation study on this property, and what does that look like for, call it, 100 grand invested?
Yep, great question, Mitchell. And so we will be running, from a tax perspective, we will be running a cost segregation study, which essentially what that means, and again, not to get too technical, is that you can, with real estate properties you own, they have depreciation every year that show up as losses against your income. And running this cost segregation study accelerates those losses massively. And again, because we're only looking to hold this property for 5 years, that is a huge benefit for us, that we'll be able to run this cost segregation study, massively accelerate the depreciation. And again, we'll know fully once we have a vendor come in and run the study. But what we've been projected at this point is for every $100,000 you invest, that will show up as about $40,000 to $45,000 of losses. And so as we're providing you on year one, and then we'll go down slightly from there. But what that essentially means, right, is that instead of showing up as as we're giving you cash flow, as you're making profits from this investment, that you will not be taxed on that, essentially, as you will be showing as losses across the property because of this cost segregation study.
It's a beautiful thing.
Powerful.
All right. Well, thank you guys. Thank you everyone for joining us tonight. Anybody else questions, last words? Really appreciate everyone's time, and we'll all be following up soon. So hopefully tomorrow, and I'll have a link to the recording tomorrow, because there were several that didn't make it tonight. So I'll send
Perfect, Brent. Thank you. And yes, we'll make sure that that we have that recording. We'll share that, as well as each of your sponsors will share the presentation. And please follow up if you'd like a call with me, my partner Michael, and your sponsor. We're happy to do it. So thank you all for being here, and look forward to having you on board with another great investment.
Sounds great.
Thanks, Sam. Thanks,
Thank you,
everybody.
guys.
Guys,
Thank you all.
everyone.
Thank you.
Have a great night.